Alright, good day traders, and welcome to this segment of the channel. This is a segment where I break down charts, and it's been a while I've done this. So let me quickly show you how to catch 1:10, 1:13, 1:12 RR as a swing trader, right? So let me first of all clear out all these levels. Now, a lot of people think swing trading is just 1:3, 1:4, and I've heard a lot of people saying 1:3, 1:4 instead of 1:10. But why would I want to take that when I know price can give me 1:13, right? So now on the monthly time frame, you can see that bearish engulfing candle right there. And when we come down to the weekly time frame, you can see that price has created what looks like a head and shoulder. But the head and shoulder is not really complete. You see, kind of stopped halfway. Let me just quickly draw it outside, see what I'm talking about. Yes. Let me pull this out. Now you can see how you can see how the head and shoulder pattern looks. Not really a typical head and shoulder, but I mean, we have to work with that, because when you look at the weekly time frame as well, bring on my arrow to, okay, yeah, that's the shoulder that's supposed to be completed right there. It was supposed to complete that, but it didn't. Rather, it just came down and formed this strong bearish engulfing candle on the weekly time frame, right? Yeah, it's supposed to complete that, but now we are on this strong bearish engulfing candle, and the weekly candle just closed. I mean, today is Saturday, so we're not going to be looking for that shoulder to be complete anymore. We are going to work with what we have already. We can already see the bearish engulfing candle. Now when you come down to the daily time frame, now this is just how I analyze, right? We go to the line chart and we see what pattern is on the line chart. We can see head and shoulders, double top, what looks like a double top actually. So we're working with that second top right there that formed the impulse move to the downside, and that's the high we'll be using right there. I actually marked it out 30 minutes because that's where we look for our entries. So that's the level we'll be working with. You can see it's equal with that high. That was what caused the impulse move to the downside. So let's keep going. You know, trading is not really difficult. It just depends on how you analyze the chart, and that's what I'm here to give you guys for absolutely free. So now let me show you how we catch that level. So when you draw your Fibonacci swing high to swing low, you can see here the -27. That's what we used as our TP2. All right, we get those levels on the daily time frame. The TP1 and TP2 is on the daily time frame. Listen carefully, and I know you're enjoying this video, so please do well to subscribe. And notice how our golden zone, the 78.6 and 68%, is lining perfectly close to this daily candle that formed the impulse move. Look at the daily candle right there that formed this strong impulse move. Our golden zone is lining up perfectly. So now we have to go down to a time frame lower to know, okay, where will be the sweet spot to enter from. Let's take this off. Now the 4-hour time frame, I can see something here as well. I can see something here. Let me quickly draw it up. Right shoulder, sorry, left shoulder, head. Now there's supposed to be a right shoulder. There's supposed to be a right shoulder, but notice what happened here. Price didn't form any right shoulder, rather it just fell off. Notice it. Price didn't form any right shoulder, so it just fell off. Now, mind you, price will want to come and complete that right shoulder. That's what I'm just saying, right? And let's draw a red bar to see if our golden zone on the entry time frame will line up with that right and left shoulder. Okay, let's draw the Fibonacci, the red bar. Let's see if our entry golden zone will line up with this right shoulder. So what we do next, we don't enter on the 4-hour time frame as well. We'll go down to a time frame lower, which is the 1-hour time frame. And what I can see from here, perfect, just perfect. Look at this, very nice. Now that's the candle that formed this impulse move. Price will most likely want to go and retest that candle before falling off. Now notice these two right here. This is a liquidity zone, right? This is a liquidity zone. Price will come and sweep that liquidity before possibly going down. So let me mark that out and label it as liquidity sweep. Yes, price will come and sweep that high. You see how everything is lining up? Everything is lining up perfectly. So now we bring the Fibonacci tool from swing high to swing low, and now this is the swing low we'll be working with, because that's the low that wanted to come and retest and form the right shoulder, but it didn't, it failed, right? Now look at this. Perfect. So look at the arrow. That 50 Fibonacci is lining up with the liquidity, and for those of you who know how I trade, liquidity zones are the 50 Fibonacci. You guys know that, right? If you don't know, then you are not subscribed, so subscribe and see how the 50 Fibonacci lined up with that liquidity zone as well. So everything I'm telling you here, we're not just making it up. The Fibonacci is confirming everything, as you can see. So let's label it as well as the 50 Fibonacci. We only use that part for liquidity, like I said, right? Let's lock it so it doesn't move. Oh shit, I've moved it. Yeah, perfect. Let me take it off so I don't click on it again. All right, good. Now let's keep moving, right? Now let's draw our golden zone. Remember the 78 and 68. 78.6 and 68. See how it's lining up with that 4-hour right shoulder that I spoke about. You see how the Fibonacci is lining up with the right shoulder I spoke about. So let's keep going. Now that's the entry trigger, right? The 74% is our entry trigger. That's what we set our sell limit, buy limit, sell stop, buy stop, whatever, right? That's what we set it. Notice how this is lining up with this red bar to form the right shoulder for the 4-hour time frame. Notice that. We didn't make this up. You saw it from the beginning right up to this point. The Fibonacci is confirming everything, as you can see. Now, let's quickly, let me delete that red line. Sorry about that. Let me delete that red line so that it doesn't complicate things. And I'm doing all this from my phone, as you can see. This is how I catch beautiful trades, like the one you are seeing on your screen right now. This is how I catch beautiful trades with high risk to reward. Very high risk to reward, guys. Very high risk to reward. Let me just arrange that so it lines up perfectly. All right, cool. Perfect. Let's look at the 30-minute time frame doesn't have any sweet spot for us to enter, so we're working with the 1 hour. Notice that candle that formed this break. So price will most likely want to go and retest that candle as well. So when you are setting your stop loss, you have to set it a little bit above. Give price a breathing space, right, for your stop loss. So we'll come back to the 1 hour, and we're going to bring out our 2. Yeah, let me first mark this out, the fib level. Yeah, that's the fib level we used for 100% retracement. That was what we used, right? That's the level that wanted to come and form the right shoulder, but it failed. So that's why we are using it. We don't just pick it out. That's why we are using it, okay? So now we're going to set our sell order from here. That's the golden zone, right? Just a little bit above or below the golden zone. In this case, it's sell, so a little bit below the golden zone. And we aim for that daily negative 27. And notice how we're making sweet. Let me set the stop loss very well. We have to make sure we are giving the stop loss breathing space, right? Breathing space. Not too much, not too less. Something nice. Yeah. We can work with that. So I've logged that. So you see right here, notice what price did. Came to form that right shoulder. Enough room for your stop loss, right? Enough room for your stop loss, because price might want to come and retest those levels, those small candles in between in the 30 minutes time frame. So notice all the levels, all the whole profit you'll be making if you take this trade. I mean, even risking 0.5% of your account, you know how much you'll be making. So that's why it's not about risking high. Go and watch the last video I just did. That is one of the... Now let me show you something real quick, right? This ultimate risk management. Now when we have a 4-hour candle close below the liquidity level, when we have a 4-hour candle close below the liquidity level, we move stop loss to this level right here, right? Not to break even, to that level right there. Now when we have a 4-hour close below the fib level, that's when we now move stop loss to break even. You understand? we move stop loss to break even. So let me draw the fib level right there so you'll see it. Yes, so when price body close on the 4-hour time frame below or above, it depends on the market structure, if it's on a downtrend or uptrend, below the 50% Fibonacci zone, Fibonacci level, sorry, let me make sure I'm not making any mistake. Yes, so notice that when price close, we move the stop loss to break even. When price close below the fib level, right, and you enjoy all this move to the downside,